This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our Dividend Stock Advisor guides and helps generate income during a period of low interest rates. We are TheStreet.com.
An exclusive club. Google shares break $1,000, making it only the second stock in the S&P ever to do so. But what is it about Google that's so important to your portfolio and your everyday life?
Market milestones. The numbers are staggering. 20% of the S&P 500 hitting 52-week highs, and the index itself at another new record. But if earnings growth is tepid, why are stocks skyrocketing?
And the $1 million flip. Buying, fixing, and reselling homes is back. But this time around, the game has changed, and some of the biggest returns are coming in just one segment of the market. We have all that and more tonight on Nightly Business Report for this Friday, October 18th.
Good evening, everyone, and welcome. Stocks end an exhausting up and down, but mostly up week with some impressive gains and another all-time closing high for the S&P 500. But of all those stocks, one stood taller today than just about any other: Google. Google shares have gone where few stocks have ever gone before, breaking through the $1,000 a share barrier today. The stock closed today at $1,011, up $122 a share, nearly 14% after blowout profits we reported yesterday. Now, you may know Google as the world's top internet search engine, or as the owner of YouTube, or as the company whose Android operating system powers the largest number of the world's smartphones. But there's a lot more to the company and where it sees growth in the future. John Fort has more on Google and what's next.
A banner day for Google. The company has arguably its most impressive day of trading ever, rising more than 13% and closing above $1,000 per share. Now, the last time it rose that much? 2008, a rough year for stocks when a few good days offset a year when the stock lost half its value. Today's trade was all about Google's third quarter earnings report and signs the company could prove to be as dominant in the area of smartphones and tablets as it was in the era of the web. As we approach the 10th anniversary of Google's IPO next year, the company has grown far beyond its roots as a search engine. Its ad network outside of its own sites pulled in more than $3 billion last quarter, 21% of revenue. YouTube, the ubiquitous video site it acquired, now pulls in more than $1 billion a quarter. And its Android operating system has become a global smartphone powerhouse. Along the way, Google's become an extension of many of our brains.
We were directionally challenged, and so we, try to find restaurants or something in different cities, and Google always saves us. We can always follow the map and find out where we're going.
I use the Google Docs and Google Drive and all that stuff. I think is brilliant and helps me a bunch with work.
Beyond the maps, the video, and the cloud, Google's become a major player in our retirement accounts too. It's the top holding at Fidelity, where it's part of 87 funds. It's number 7 at Vanguard, where it's in 30 funds. In so many ways, Google is everywhere.
The internet, in a lot of ways, becomes like electricity. It's just around you all the time, always available. And I think that's where Google really seems to be pushing the envelope and having the ability to just have all your information available to you wherever you are at any point. Not having to sit at a desk, stare at a screen, not even having to pick up a phone and put it to your ear, but having it simply around you, much like we think of electricity today.
This historic rise for Google, a bit reminiscent of Apple's run last year, which saw it peak just above $700 a share in September. It tumbled for the next 9 months, losing nearly half its value. We'll have to see whether Google's good fortune lasts a bit longer. For Nightly Business Report, I'm John Fort.
Well, that record high for Google helped fuel another day of records on Wall Street. Most of the major averages were up by 2% or more for the week. Also powering up stocks, news that China's economy grew faster than expected in its latest quarter. Here are the closing digits on Wall Street. The Dow rose 28 points. The Nasdaq jumped 51. It's now closing in on the key 4,000 level. And the S&P 500 added 11 points. Enough for another record close. So stocks are obviously back on track. But just how long can the positive momentum last?
Everywhere you look, the stock market continues to hit new milestones. 7 of the 10 S&P 500 sectors traded at record levels today, led by healthcare and consumer discretionary. both up more than 30% this year. The rally is even broader than that. More than 20% of the S&P 500 companies are at new 52-week highs, many at all-time highs. On top of that, the blue chip Dow is up more than 17% this year. The Russell 2000 and the S&P Mid-Cap 400 are at all-time highs, and the Nasdaq is at its highest level in 13 years. But how long can this last? Usually, it's corporate earnings that power up stock prices. That's been happening for the past 3 years. But now the tables have turned. Earnings have slowed. They're up only 4.3%. But stocks are skyrocketing. The S&P 500 stock index is up 22% this year. And it could go even higher if companies like Google continue to wow investors. But the government shutdown took a huge bite out of the economy. What will the lasting effects of that be? Can lawmakers agree on a budget? When will the Federal Reserve begin to taper its stimulus? And will the answers to those questions temper investors' appetite for risk?
We turn to Liz Ann Sonders now for answers on where the market is heading and whether she sees this good streak for equities continuing. She's Chief Investment Strategist at Charles Schwab. Liz Ann, welcome back. You know, Google's earnings notwithstanding, the numbers so far are relatively tepid, which begs the question, has the market gotten ahead of itself?
I don't think so, Ty. I think you're sometimes in an environment, as you were for the first 3.5 years of this bull market, where earnings powered ahead at a faster pace than prices went up. So the valuation, the PE, actually came down as the market was doing well. So far this year, we've actually been in an expansion of valuation mode. In other words, prices have been moving up faster than earnings. We are still on a forward earnings basis, though, still inexpensive relative to the long-term norm. And the conditions for continued valuation expansion are there. So it's a misperception that a slowing in earnings growth automatically means problems for the stock market. We're in that latter stage of valuation expansion.
Liz Ann, I want to ask you about Google, but I know you can't make any recommendations about individual stocks, but more about what is Google hitting 1,000, that big round number, mean for market direction and investor confidence? Are we getting a little bit ahead of ourselves?
I don't think so from a market perspective. I think Google is certainly a proxy for technology. It's a proxy for the NASDAQ. And, as you mentioned just before we came on here, the NASDAQ's at a 13-year high. We're closing it on 4,000. I think a few years ago, it was unthinkable that we might be getting close to the 5,000 level peak that we saw. And we have to remember that technology really was left out of the last bull market from 2003 to 2007. So it has been a very long drought in terms of this love affair for technology. And we may starting to see the seeds of that. And I think that's a good thing. We think the technology sector is extremely attractive right now. So anything that drives a little bit more of that enthusiasm for the sector, given the fundamentals very strong, valuations very strong, I think is a good thing.
In some ways, Liz Ann, I think that the environment for stocks right now is about as perfect as it can be. You've got reasonable but slow growth. It's certainly not runaway growth. You've got virtually no inflation to speak of, and you have low interest rates, which means that the cost of capital is down and there's no competition from bonds. So I wonder why individual investors haven't been buying with both hands and fists in this market. What are investors telling you and telling Schwab?
There's a tremendous amount of latent skepticism and I think even still bearishness. And a lot of it has to do with muscle memory. I mean, the severity of the financial crisis, both in economic terms and market terms, was so severe. And it came not that far after, of course, the last bubble burst into 2000. And I think that muscle memory really hangs around for quite some time. So what we're hearing is still much more concern about the macro, still a lot of sideline money looking for that next shoe to drop. But to your point, Tyler, this kind of environment, which confounds a lot of people because we don't have strong economic growth, we used to call an environment like this Goldilocks. I think people are hesitant to use a term like that right now. But to your point, that's the kind of environment you want to see. And this grinding higher slowly is pulling investors in, getting them more emotionally attached to this market. If you had really straight shot up, late 1990s type environment, that would be more concerning. I love the fact that we have this wall of worry. And when that starts to dissipate and that enthusiasm turns into euphoria, that's when you want to be a bit more cautious.
Liz Ann, great to see you as always. Liz Ann Sonders is Chief Investment Strategist at Charles Schwab.
Thank you.
Well, it was a banner day for General Electric today. It was the best performing stock in the Dow. Shares of General Electric jumped 3.5% to $25.55. That's a 5-year high. Investors bought up the stock on better than expected quarterly earnings. Now, profits fell by 9%, but earnings per share came in at 40 cents, and that beat estimates by a nickel. Revenues were also down, slipping 1% to $35 billion. But the company reported a record backlog with orders rising 19%, and that gave investors a lot to look forward to.
One of the country's biggest investment banks, Morgan Stanley, reporting third-quarter earnings, and the news was pretty good. Profits nearly doubled to just over $1 billion, mostly thanks to an increase in stock sales and trading revenue, and in its wealth management unit. CEO James Gorman said the bank's plan to focus on individual clients and to sell off non-core assets, like a stake in an insurance broker, are paying off for investors. Shares ended 2.5% higher today.
Another fine for J.P. Morgan Chase. It's agreed to pay the Federal Housing Finance Agency a whopping $4 billion in penalties. The Wall Street Journal says the nation's biggest bank reached that settlement today for misleading the mortgage agency about the quality of risky home loans that it bundled up and sold as securities during the housing boom. The deal is a lot less, though, than the $6 billion that the housing agency was originally asking for.
Well, if you've ever been slammed by overdraft fees by your bank, help may be on the way. Taking a page out of the community bank playbook, Bank of America is planning to offer a new type of checking account that will prevent customers from going over their account balances when making an ATM withdrawal or making an automatic online payment.
Another setback for the troubled rollout of Washington's online health care exchanges, all a part of the Affordable Care Act. Some big health insurance companies say they've gotten faulty data from the federal marketplace, enough to hamper their ability to even handle the modest number of enrollees who have signed up so far. Problems include duplicate enrollments, spouses reported as children, missing data fields, and questionable eligibility determinations.
And still ahead, home flipping, it's back in a big way, but this time it's different. And the big returns are coming in the very highest ends of the housing market. First, a look, though, at how the international markets closed today. With home foreclosures on the decline, mortgage rates are relatively low, and home buyers are focusing on constructing more modest homes. Buyers who flip houses are now entering a whole new market, super high-end homes. Diana Olick has the story.
There's a lot more than a coat of paint going into this Los Angeles home.
And we'll take them down to the retaining walls or the studs, and we'll build back up with an architecturally designed home that flows. We really take the extra time to order the finishes that higher end customers are going to respond to.
So this part of the I-beam is going to be exposed.
Because high-end customers are Nicholas Sinatra's bread and butter. His company, American Coastal Properties, specializes in buying, remodeling, and flipping multi-million-dollar homes.
In the hotter markets like coastal Southern California, you have a unique situation where there's a high barrier to entry and highly desirable neighborhoods where people want to come in and there's no supply, there's no inventory.
Rather than go through all the zoning and tax issues involved in a total teardown, Sinatra and his team of architects and designers seek out homes in sought-after locations that they can get at a slight discount because they need some work.
Wow, this really came out great.
They bought this one for $735,000, redid it inside and out, and listed it for close to $2 million. It's riskier because it's pricier, but demand is there.
You see a lot of foreign buyers coming in. They're all cash buyers.
With so few homes on the market, some flippers are canvassing older, still popular neighborhoods just like this one and actually ringing doorbells to see if anybody wants to sell.
It's a bigger upfront risk, and on the back end you have usually fewer buyers, but the payoff also can be much bigger. We're showing the average gross profit on one of these high-end flips is about $240,000 compared to about a $55,000 average profit on the lower end.
It does make this backyard pop.
American Coastal, which is for now just in Southern California, will flip between 30 and 50 homes this year. That's thanks to a $50 million infusion from private equity firm Colony Capital and the Pritzker-Vlock family office.
We're looking at properties all the way from $1 million in the acquisition price up to, we just purchased one for $9.5 million.
They'll spend anywhere from 50 to 100% of the purchase price on remodeling, but Sinatra claims they're seeing returns in the high teens and low 20s. It helps that there are very few competitors in his space, but given the possibilities,
This could be a home office back here.
that won't last long. For Nightly Business Report, I'm Diana Olick in Washington.
And Diana has more on the trend in high-end house flipping on our website, NBR.com.
Earnings and more earnings. That's where we begin tonight's market focus. Honeywell reported earnings in line with Wall Street estimates, but weak demand for its defense products and slowing economic growth prompted the firm to cut its full-year revenue forecast. The company blames the weak results in its defense unit to supply problems and the sequestration. Shares fell 2.5% to $84.58. Schlumberger, the world's largest oil field services company, reported a better-than-expected rise in its quarterly profits. The company benefiting from increased offshore drilling in North America and from growing international demand. Schlumberger has topped analyst estimates for 8 straight quarters. The stock popped almost 3% to $93.99. Demand for drilling also helped Baker Hughes' bottom line. This oilfield services company also beat Wall Street forecasts, citing healthy demand from the Middle East and Asia. The stock spiked 7% to $55.55.
Ingersoll Rand beat Wall Street earnings estimates thanks to a rebound in the U.S. housing market. The company, which makes air conditioners, refrigeration units, saw an increase in demand for its products as more Americans bought new homes. That helped lift the stock 5% to $66.85. Intuitive Surgical's profit dropped as sales of its flagship Da Vinci surgical arm declined sharply. The company also warning investors that its full-year revenue growth is likely going to come in at the lower half of its forecast range. Shares dropped almost 6% to $376.52. And the power company NRG Energy plans to pay $2.6 billion to acquire the assets of the bankrupt unregulated power producer Edison Mission Energy. The deal will nearly quadruple NRG's wind generation capacity, making it the nation's third largest producer of renewable energy. If approved, NRG expects the deal to close in the first quarter of next year. The stock climbed almost 5% today to $29.30.
Our Market Monitor guest tonight has these words of advice for investors. Buy good quality stocks and stay away from risky investments. He's James Awad, chairman of Plimsoll Mark Capital. Jim, always a pleasure to have you on.
Thank you.
So you heard all of our reporting, all of these market records, Google hitting a record $1,000 price. What's your take on the market? Can it keep up this momentum, or are we getting into a dangerous territory?
Well, I agree with a lot of what Liz Ann said, but I would add that valuations are now fair, not cheap, that we are going to be revisit Washington in a few months, that at some point the Fed is going to begin the taper, and that there is speculation in the credit markets. Many people would say as bad as 2007 because the Fed has pushed people out the risk curve. So I think you can stay in, but you have to stay in with quality stories, with good balance sheets, and either good income or earnings stories.
You know, Jim, we began the broadcast tonight with a story about Google. Do you own it? Would you buy it? It was up 13% today.
Yeah, it's a very hard call. Look, I don't own it. If you wanted to own it and you had a 4 or 5 year outlook, I'm sure you could buy it and end up making money. But intuitively, it reminds me of Apple. When Apple hit 700, that people tend to get overexcited, and most people who study the company have a value of about $880 to $1,200. So it's about in the middle of that range. So if you didn't own it, you could buy half, but I would wait for a correction to buy the rest.
So you just mentioned Apple, and that's one of your recommendations for tonight. Let's talk about Apple. It's at $508 a share. It's been creeping back up. Why do you like it at this price?
Okay, so it's in the middle of a new product flow, many of which look exciting. It's got a tremendous amount of cash. Its valuation is not high on roughly $45 of earnings next year, and some very smartest people in the industry are buying it. So I like the company of the people who are buying the stock. I'm not sure it'll get back to 700, but I'm not sure why it couldn't get to 600.
Let's talk about an old favorite. General Electric, which has not been on many people's buy lists for quite a while, but it's on yours right now.
Well, they are transforming the nature of the company, reducing finance, reducing media, and increasing infrastructure and industrial, which increases the margins and the growth rate. So you get a 3% dividend, and on $1.80 of earnings next year, I think the stock could go up 10%. So you could get maybe a 13% total return with good quality in GE.
And let's talk about Morgan Stanley, which reported earnings and doing very well. The stock has been climbing actually all year. As you look at this chart here, it's now at 29.69. What's attractive here?
Well, again, here's a case where Mr. Gorman has dramatically changed the complexion of the company, lowering the high-risk, volatile parts of the business, increasing exposure to money management, asset management, which is high margin and stable. So the inherent profitability of the company is increasing, and it's got about a $27 tangible book, and estimates next year are for $265. So I could see the stock going up to 34 or so.
All right, let's take your last choice, which is not one I'm familiar with. TCP Capital, ticker TCPC. What do they do, and why do you like them?
Okay, so it's a business development corporation, which is related. Think of it conceptually as an REIT because they don't pay earnings. They pass it along to shareholders. So big banks are not lending much to small and medium-sized companies anymore because of regulation and capital constraints. And this business development corporation industry now replaces banks. And this is one of the highest quality ones. They have a wide variety of industries that they lend to high-quality, medium-sized companies. They sit on the top of the balance sheet with senior debt, variable rate. It's got almost a 9% yield. I met with the management this week. This is a quality 8.5%, 9% yielder, and I think and it's selling very close to book value. And I think they can grow the book value and the income stream over time. So it's not without risk. If you went into a 2008 kind of period, these kinds of stocks would not do well. But I think we're in a stable economic environment. So in the sweet spot that we're in, I think it'd be a good total return stock.
All right, sounds really good, Jim. Any disclosures to make?
Well, I own TCP for myself and my clients, and we own the Morgan Stanley and GE bonds for our clients and myself.
Thank you so much, Jim. Have a great weekend.
Thank you.
James Awad, chairman of Plimsoll Market Capital. And coming up next, video gaming. It was a sector in decline, so why is it suddenly powering up? But first, how commodities, treasuries, and currencies perform today.
The 16-day partial shutdown of the government had a big impact on shopping, with Americans pulling back on spending during the few days of that work stoppage. Retail research firm ShopperTrack reports that sales fell 7.5% in the first week of October compared with 1 year ago.
But sales of video games are booming. They shot up 27% in September. They got a huge boost from the highly anticipated release last month of Grand Theft Auto 5. And as Julia Boorstin tells us, the video game industry is making a big comeback.
The record-breaking launch of Grand Theft Auto 5 was a game changer for the struggling video game business. Pent-up demand for the game, it had been 5 years since the last one in the franchise, paid off big time. Game maker Take-Two Interactive reported a record $1 billion in sales for the game in just its first 3 days. Thanks to that hit, total September game sales surged more than 50% from a year earlier. Over half of those sales were Grand Theft Auto.
The high-quality games are selling as well as they ever have, really better than they ever have. The concentration at the top of the industry has become enormous.
And Take-Two's success with Grand Theft Auto last month bodes well for its competitors' big game launches this fall. People have proven willing to pay $60 for the biggest brand console games.
The new Batman game looks really cool.
Call of Duty, yeah, definitely.
I'm more excited about the new Assassin's Creed and Call of Duty Ghosts.
It's a crowded fall with Ubisoft's Assassin's Creed 4, Black Flag, and Electronic Arts' Battlefield 4 launching October 29. Then a week later, Activision's Call of Duty Ghosts is expected to be the second biggest game of the year, and it could even top Grand Theft Auto 5. In contrast, consoles suffered last month. Hardware sales falling 13%. No surprise as consumers wait for Sony to launch the PS4 and Microsoft to introduce the Xbox One.
I'm going to buy the PlayStation 4 as soon as it comes out.
Xbox One, definitely, because we've grown up with the Xbox.
I'm hoping my parents spend a lot of money for Christmas. That'd be the best option.
It's been a long time since these current consoles we have out launched, and I think that there is pent-up demand for something new. And you also have a lot of great-looking software coming out over the next year, which I think is going to support demand. So I'm pretty optimistic that this cycle is going to get off to a very good start.
And while September's big gains were about physical sales, this next cycle is increasingly about digital, which accounts for about half of all consumer spending on games. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And finally tonight, we now know the identity of the person who bid nearly $1 million to buy the car-turned-submarine that James Bond drove in the 007 classic, The Spy Who Loved Me. It's Elon Musk, the billionaire co-founder of PayPal, SpaceX, and Tesla Motors. Musk plans to take the movie prop, which doesn't even work, and turn it into an actual car that drives on land and then becomes a submarine in water, just like in the movie. And if there's one guy, Susie, who can do that, it may well be Elon Musk. I can't imagine there's a lot of demand for cars like this.
So you've done a test drive on the Tesla. When this becomes reality, you have to do a test drive, but you need a wetsuit, apparently.
Oh, is that right? To do it?
Yeah.
Well, all right. We'll go out in the Hudson and do it together.
That's Nightly Business Report for tonight. I'm Susie Garib. Have a great weekend. Thanks for watching.
And thanks from me as well. I'm Tyler Mathisen. Have a great weekend. We'll see you here on Monday night.
Nightly Business Report has been brought to you by
Street.com, interactive financial multimedia tools for an ever-changing financial world. Our Dividend Stock Advisor guides and helps generate income during a period of low interest rates. We are TheStreet.com.
Susie Garib with a Nightly Business Report news brief. Google mania on Wall Street today. Shares surged past $1,000 apiece. It's only the second stock in the S&P ever to do so. Google's rise and a string of solid earnings from the likes of General Electric, Morgan Stanley, and Honeywell fueled another round of records in the stock market today. The Dow rose 28 points, the Nasdaq jumped 51, and the S&P 500 added 11 points, closing at another all-time high. Another big fine for J.P. Morgan Chase. It'll pay $4 billion in penalties to a federal mortgage agency for giving misleading info about risky home loans it sold. And video game sales are booming again, up 27% in September, thanks to sales of one popular game, Grand Theft Auto 5. Be sure to tune into Nightly Business Report right here on your public television station.